to the key events and themes this week. Let's start off with the Eurozone. So for the Euro, two key bits of data in focus. The Eurozone GDP, second reading, and the final reading for CPI. As we know, the bloc is continuing to show encouraging signs in terms of its economic conditions on a strong path of recovery, which is good. There's only two things at the moment that's hampering the bloc: subdued inflation and low wages at the moment. Nevertheless, I'm expecting strong readings for both GDP and CPI. I'm looking for a marginal pickup for both respective numbers. We did recently see strong, very strong retail sales for the bloc, smashing analyst expectations and really picking up from the previous reading, which is good and encouraging. So I'm expecting that to continue to filter through in these respective data points this week. What does that mean for the euro? Well, this week, looking for it to continue to gather momentum. If we look at euro dollar specifically on a weekly chart, we did, yes, receive a minor setback at the very beginning of last week. However, it did continue its path north and looking for that to exceed 120 plus in the coming weeks or months. So do keep an eye on euro dollar, certainly one to watch. Over in the UK then for the pound, there are three data points this week to be wary of. They're all linking together really. That's 1, inflation, 2, average earnings, and 3, retail sales data. If we're looking quite broadly here, the average household in the UK are really feeling the squeeze at the moment due to a tightening or low wages or the low real income, and the fact that we're seeing a drastic rise in both energy and food prices, the necessities really. Looking at inflation, yes, we did see a minor pullback last month to 2.6%, which is what the Bank of England wanted to see. However, it's expected to peak at 3% according to the Bank of England's projections in the next couple of months or so. So obviously, naturally, when inflation is well above a respective central bank's mandated level, what they should do is hike rates to bring down prices, to cool inflation, guys. But they can't do that at the moment because many economic points do not warrant them doing that, so they're having to sit on their hands. So naturally, the pound should strengthen on that because market participants would be expecting them to raise rates. But as I say, they can't do that at the moment, guys. So I'm looking for pound to weaken on higher inflation potentially this week. Looking for still subdued retail sales, and also still seeing a contraction or weakness in real income for UK citizens. So do bear that in mind, guys. So could be in trouble this week in terms of sterling. Over at that, the dollar there, we do have the FOMC minutes of their last meeting. Two things market participants are looking out for: specifics on what they mean by relatively soon in terms of pullback or withdrawal from their own or reduction of their own balance sheet, their QE essentially. So to give us some time frame on that. And two, what they think about inflation. As we saw last Friday, guys, it's still low, and also producer prices index, PPI, is still not where it needs to be, so they can't raise rates or continue to move forward with their own tightening of monetary policy. So the dollar this week could be in for some trouble. And secondly, we also have retail sales numbers. As we've seen, those have been contracting. They've been in negative territory for the past 6 months now, and not expecting that to change anytime soon. So the dollar, well, that small path of consolidation that we saw at the beginning of last week certainly could run out of steam this week. And very lastly then, there are many other data points this week, guys, to mark in your calendars. I will be posting short previews via the Duke Scobie FX Market Freak Instagram account, so keep an eye out for those posts. And separately, outside of economic releases, as we saw heightened concern between both US and North Korea at the moment, in terms of the markets last week, we did see participants pulling away from those riskier assets. The equity markets, we saw a drop in DAX and FTSE, and people putting their money into the fixed income products, you know, your treasury bonds, UK gilts, etc., just for a safe haven. And flights of flows were certainly going into the safe haven currencies like of yen and Swissy. So keep an eye if that does continue to get a bit fiery between the two countries this week. Other than that, that's it from me. Have a smashing trading week, and thank you.